Hello, everybody. How you guys doing? And welcome to Monday. With me is my buddy and trade colleague Lee, and he is happy about a certain Lewis Hamilton. So, well done, Lee, and welcome to another episode, guys. Lee, today we were looking at how we can um, take a step into some of the alts. We wanted to touch on that, and we said that before we do that, we obviously want to help you guys with some proper risk management. But risk management does play a big role. But I think for now, like you just said before we jumped on, we maybe need to be looking at a little bit of Bitcoin and use that as a foundational idea to think risk management, because I think everybody is kind of dying to find out what is your next game plan for Bitcoin.
Yeah. How are you? How are you, Rodo? Hi, everybody. Hope you had a good weekend. So let's get started.
Yeah, our showmanship is still a little bit lacking here, buddy. I think we said hi too many times already today, so we kind of overlooked the communication around that. So I do apologize. But all right, guys, the content will be good. I promise you that, and the TA is always going to be excellent. So, Lee, I'm adding you in there, and let's have a look at this Bitcoin. So, what am I looking at there, buddy?
Where we left Bitcoin last week, basically. It's our chart. We are still hovering within this range, 60K, 55. Yes. So what we picked up last week was this kind of move. I was expecting a 1, 2, 3, and before we left Friday, we said the fourth wave may end up here at 38.2, which way we went over the weekend at 38.2, and now we've seen the first reaction down now. Okay, so the level that I'm watching now on the fifth wave to go down is if they do a truncated fifth, a shorter fifth wave could be at 56. 100% of that fifth of this will be at 53.5. My worries is that everyone is expecting a 52 in the market right now. And like we say, if everyone is expecting something, you might not get it. So for me now, there's two solutions on Bitcoin. Either we go up first, and fourth wave is not done. We may even retrace to 50%, a little bit higher. Stopped out all those people that are shorting already in the market right now, and then coming back to a lower level, or we smash it down and we smash even this 53 and we go straight to 49.50. So in order to have more fear in this market, if everyone is expecting 52, there's for me two solutions. Either we're gonna stop before 52, which is this 55, even at that level 56, or 53.5, and we're going up. So 53.5 and we're going up, or we go up first and we smash it down to 49. So basically, we're not gonna stop right at 52. So it's either gonna be below 50, 49, or we stop before 50 at 53 and we're going up. So this is how I look at the market right now. One of the possibility, knowing that I don't have a crystal ball, guys. All we can do here is to do some kind of prediction and put a trading plan in place.
Awesome. Lee, do you mind just zooming in a little bit on some of those candles that you've got there? I just want to see something, and I just want to point something out to you guys. Oh, I pressed the button now, everything is gone. Okay, so when we look at this progression that we've got here, if you can zoom in between your 3 to your 4 and just make that the screen, so we can have a look at that.
Which time frame you want it? 4 hour?
I know it's fine this time frame. I think the important thing that when you said something, we are getting a reaction and we moving back down. You've traced back down. The way that we look at this, and it's kind of intrinsic and instilled in us, and we tend to take this for granted. But if you look at that two candles that pushed us into the higher price ranges. So if you can maybe in the middle of your screen, there's a bearish candle and then a really big bullish candle. If you can have your cursor above them so that they can, those two. and take a line and just draw a line on the bottom of those two candles, a horizontal ray. On the closing price of them, open and closing price there. Now, when you look at the, thanks, buddy. Right, guys. So now you can see where Lee's 4 is, that top line there. And when you look at from that, the reaction back down, there's two bearish candles. So you've got a, what is, I think a pin bar or something. I don't really know the candle labels. That one on the 4, the apex.
Pin bar.
But
I would call it a pin bar as well.
yeah. But the two candles that went after them, that is bearish engulfing structure, because what happens is the whole manipulated move that took us to this area where everybody over the weekend said it's on, you know, it's bullish, buy, 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 get your buys in. That structure, that momentum, because it was manufactured, got engulfed right back down. And that is those two candles there. And that is a telltale sign that the larger time frame trend, that we were hoping for 4 to a 5 wave correction, that is kind of in play because of the fact that we're engulfing any bullish momentum that takes us through resistance zones. Because if you look at that candle and you look at the first candle that Lee crossed, Lee, if you put a ray roughly in the middle of that candle, you can see that that was the resistance that got broken. Because look at the candles that preceded it. They all closed above it, and we literally just left it. We're not even fighting around it. We're away from that zone. And if you go further to the past, there where your first set of green, blue, and purple, yeah, those candles, you can see that those wicks, they all went down to that level, that support level. So that was support where people were interested in buying. And when we lost the support, we've tried to reclaim it, but we had a definite reversal away from it. So that's the story that the candles tell me. So from where Lee's cursor is, we went up a little bit higher, and then we had a complete reversal down that took us to the lower 50,000 level price. We tried to get above it again and completely lost it with a full bearish engulfing structure. So that's just something to look at. And that's when support and resistance levels become really fun, because you can start painting these pictures for yourself in your hypothetically, what really happened. You know, people were fine with having price at, just experiment. People were fine with having price at 58 as a special. And then it got a little bit more on discount. And then all of a sudden, 58 is no longer good enough. And that's how the story around this support and resistance level really went. So yeah, okay, thanks, Lee. That's just something I wanted to add on to that. But I think the big question and the big topic that everybody was saying, and we were actually kind of, explaining to you guys last week, is risk management. So if there's nothing else you want to share on Bitcoin for now, because at this stage we're mid a trend playing out. Then we can probably
for
move
me,
over
it's
to
kind
risk
of
management.
Yeah, just for me, like I said, kind of obvious. This line here, the red one, I think was the same at 56.7. So if you close below this, I'm expecting a lower level at 54. So maybe a reaction at 54, there will be nice support. Yeah, so like I said, 52, not much yet. First 54, and I'm expecting a reaction to the upside at 54. To add on that, why I'm saying that we may go up first, because again, I mean, this long versus short, I see that a lot of people are starting to short here. Not quite sure from which level they started shorting BTC already. And yeah, so open interest, we can have a quick look. For me, it's also quite high here. It's still, the graph, as you can see, is still sitting at very, very high level. And usually when the open interest is at this high, usually we have a sell-off. We need to shake people out of this bus before we can react, before Bitcoin can go higher. Liquidation level, the liquidation over the weekend has not been like so big. So a lot of people are still in the market. They haven't been shaken out yet. So for me, it's just consolidating, and we still need to come and check those people out. One thing also can happen, we just consolidate a little bit more within this range, because here on the November 26th, there's a big open interest that is supposed to close on Friday, this Friday. Max spend price is sitting at 58,000. So I think that this week we're gonna maybe waste some more time. So that will put more weight on the theory that we're gonna range between this 55, 58 for the whole week. So maybe this fourth wave is not done yet. We're gonna do more of a complex correction, coming back, stopping out people from the long and the short at the same time, wasting a little bit more time. So that's why we need maybe to look at a more complex pattern for the fourth wave, and fourth wave is not done yet for me. Okay, so this will bring the price a little bit up before we can go down a little bit more. So that's my theory.
It's a really good theory, and I mean, I keep on looking at Bitcoin, and I kind of have the same feeling that everybody's getting too blatantly comfortable with the fact that you go through a halving, price goes up, you go through a halving, price goes up, and there's a long accumulation, and then price goes parabolic from that range. And if everybody's kind of feeling it, you have to ask yourself the question, the market never does what everybody wants it to do. So maybe this is the longer accumulation on even a higher time frame that's going to happen within this range, in order for us to have that super cycle that everybody is talking about. And when I look at this trading range on the larger time frame, it's just more obvious that we might be in a bigger picture reaccumulation phase before things really start going ballistic.
Yeah.
So I like the theory that you say this four is not over, and everybody will probably need to first get comfortable with the position they find themselves in now.
Exactly.
Okay, right. So
exactly as I've been predicting.
Exactly. Okay, right. So with this being said, guys, now we need to think about risk management. And while we look at risk management, these are things that I think should always be kept in context. And Lee, we've looked at the risk management notes, and I think that it's really hard because we can't literally have a one risk plan scenario that suits each and every strategy out there, and each and every trade style, and each and every game plan. So it's important that you take the risk management that we're going to be sharing with you guys and just put it in context, apply it in context of what you are trying to achieve. So Lee, your first major thing, and I really like this, what you say about what makes more traders successful than other is using the wrong strategy or have no planning. Can you elaborate on that for us, please, buddy?
Well, I like the picture the story that you're telling everyone. I think it's about going to a golf course, and are you prepared to have a bet against Tiger Woods? For me, exactly the same. I mean, you can take the golf course as example, or I don't know if there are poker players out there. It's same. I mean, if you participate in a poker tournament, if you go to the WSOP in Vegas, are you gonna bet your whole money, your whole saving, including your bonds and everything, go into tournament and play poker against those world top 10 poker players?
And you might be only doing it for 2 months.
Well, it's an event of a week or 10 days, but will you go with all your money and bet against them? Because they will prepare, they've got more experiences, they will prepare, they've got a plan for every single hand. And you, as a beginner, you might win 1 or 2 hands against them by pure luck, but on the long run, you're gonna lose. Why? For the simple reason because you don't have a good strategy, and you haven't planned, you haven't trained yourself, you did not plan the strategy against them, right? So that's basically in trading, that's the same for me. The question you need to ask is, like in poker, in a tournament or cash game, where is the money coming from? The money is coming from the market, is coming from other people's, other traders' wallet. And they will not give it to you so easily. You have to fight, you have to trade against them, and you have to take their money, right? So that's why you need to have a plan. You need to prepare yourself, and you need to control the risk and get a better planning than them. Not get a better planning, but a plan that suits you, most importantly, because I believe that everyone is different. Like again, Rudo and I, we are different. We are different traders. We use different strategy. Doesn't mean that my strategy is better than him or he is better than mine, but it suits our personality, right? So, yeah.
So Lee, with that being said, I mean, we've now said to you guys, it's like going playing golf. You don't go and play golf with Tiger Woods thinking you're going to win that game. He's been at it for longer than you. He knows the ins and the outs of the course, most probably all the hidden tools. He's got all the tools, the right caddy, everybody fighting and helping him being the better guy. And you just bought your golf courses secondhand from a friend that they've been laying in a garage and dusted them off and said, right now I'm going to become a pro golfer. There's going to have to be some effort and time spent. And that's normally where most people first slip up. The same goes with investment, because we think that just because the market's open to all and everybody's willing to participate, that, okay, it doesn't really take that much effort. But the sad reality is that so many people out there make that mistake. Lee, you shared with me over the time a 90-90-90 rule. Please just quickly elaborate on that.
Well, if you are not planned or if you are not prepared, there is a rule out there says that 90% of the traders are going to lose 90% of their portfolio in the first 90 days. I don't know if it's true. It's definitely true. It is definitely true for me. I didn't lose 90%. I maybe lost 70% in the, I don't know first for many days, but I did lost a lot of money because I was like everyone. I come to this place, I say, oh, it's so easy, you know, following some kind of some traders at the beginning, not understand anything. And then I saw that because I was paying that guy, he must be right all the time. The problem is when he was wrong, I had nobody to turn to and explain to me why he was wrong. So, and then you were left alone in the dark. You don't know what to do basically. So that forces me to learn and to blame only myself and not another third party. Because when the beep hit the fan, you have no one else to turn to other than yourself. Yeah. So the goal here is to prepare you guys, to have a trading plan, and then understand that this trading plan is different for all of us. So because our goal is different. I mean, what is your goal? Why are you here? Why are you in cryptocurrency? For some of you guys, maybe it's to make a living out of it, and for majority of you, maybe it's just to invest in cryptocurrency. And even in that, what is your plan of investment? It can be on over 10 years, can be over 4 years, can be over 20 years. So what is the time period? What is your goal basically by being in space? So you have to put everything in the picture first, and then have a plan that suit your goal, your plan. So I don't know, what's your plan, Udo?
Well, you said it to me beautifully. You said it actually very beautifully. And who am I? I am not at risk adverse as you are. I like to take things a little bit slower. Okay. Secondly, my goal is I've got a trading portfolio and I've got an investment portfolio. Now, I don't want to call it an investment portfolio for this webinar's sake. It's my retirement money. That's the scale of time that I assign to an investment portfolio. And trading money is my for now money. The idea is not to lay too many long-term goals in there, meaning you get a lot of people that fall into trades. You hear them, you comment them a lot. I bought this thing in the wrong time and I'm just going to make it an investment. But if it's your trade money, you cannot change the rules on it. To create a sustainable management plan or system, the rule has to be predefined and you have to stick to it. You have to be able to forgive you for the mistakes you made in the past, but now that it's done, you draw the line, you say, well, that's it. I can't go and change it now, but going forward, I will correct this. So that's what I would first do. And then once I've done that, once I know who I am, then I'll move into my stop loss. But a stop loss means nothing without a proper strategy, Lee. So the main thing is my strategy is going to be the biggest thing in question. And what we did today is, we actually created a little tile for you guys on how these strategies are going to affect your trades and, in theory, your investments, if you were to apply that to your investments as well. Lee, so if I bring it up, will you be able to quickly run everybody through that? Well, I think you will be able to, but will you run it for everybody through?
Well, let's try.
Okay, cool. So what we've got here, guys, we've got a tile that shows everything, and I just want to explain my thought of the graduates. To the left-hand side, you'll see that that's the risk. And basically, risk equals the total percentage, or the total percentage equals 1. So that's how you calculate your risk to reward ratio. So if I lose 3%, let's make that rounded. That's the factor, or that's the placeholder for 1. My reward needs to be double that, or triple that, or 4 or 5 or 6 or 8 times that, in order to have a proper risk to reward ratio. So Lee, just talk us through that, and you can beautifully show this on the chart normally with your risk to reward tool in trading.
Well, if you want to leave that first on the screen, because for me, guys, this is the most important table, and that has basically changed my whole way of thinking about the trade. Then bear in mind, this is for me just trading. It's not investment strategy. So as a trader, you understand that you need to adjust your risk to reward ratio. So as you beautifully explained, Rudo, when you risk $1 in this market, you want to make at least $2 or $3 or $4 and so on, and bigger number, right? Because if you're only targeting a 1-to-1 risk to reward ratio, it means that if you put $50, you only want to make $50 out of it. I would rather suggest you to go to casino and bet on a red or a black.
But wait a minute,
but it's much faster. And well, it doesn't even give you a 1-to-1 because the casino always wins, right? But you don't need to work for it. It's just like call it close to 50% of chances. You don't need to spend time working on the chart and everything. So for me, when it's worthwhile working, studying the chart, is when you have a risk to reward ratio over than 2-to-1, at least a 2-to-1 risk to reward ratio. But the most important here is the win rate percentages to be at break even. Over 10 trade, over 20 trade, over 100 trade. So let's call it 100 trade. Do you know that if you have a setup, every time that this price action happens, you enter a trade and you risk $1 in order to make $2. And if you make 40% or 40 winning trade over 100, you will be profitable at the end of the month, at the end of the year, in that specific time frame over this 100 trade. That's huge. You need only to win 4 trades out of 10 to be profitable. It means that it's okay to lose. It's really okay to lose 6 trades within your 10 trade. It's okay to lose 60 trade within your 100 trade and still be profitable at the end of that experience. Okay, and that's only a trade with a risk to reward 2-to-1. So now, if you go further down, you have a 3-to-1, or 4-to-1, or 5-to-1. It means that a 3-to-1 risk to reward ratio, it means that every time you risk $1, you try to make $3 out of it, and you only need more than 2.6 trades, so 26% winning trade. So if you win 3 trades out of 10, and you have a setup every time at 3-to-1 risk to reward ratio, you are a profitable trader, right? 30%, 3 trades out of 10 with that risk to reward ratio. So when you explain it like this, it doesn't sound too complicated to do, right? And look at this 8-to-1 risk to reward ratio, 12%. It means that if you win 2 trades in 10 setup, in 10 attempt, 2 winning trade, 8-to-1 risk ratio, you are profitable. So it's okay basically to lose 8 trades within your 10 trading experience or trade setup. But now the problem is, this is the most important part as well. For someone like Rudo, he will hate it losing 8 times in a row. He cannot smile. You won't even see him on YouTube anymore. He's gonna be learning, reading books anywhere. I cannot even phone him. He's not gonna answer my phone. Why? Because he hates losing trades. So maybe a less risk to reward ratio trade will suit you better, Rodo. I mean, at 3-1, 2-1, 4-1.
Definitely.
It's gonna be better for you. But me, to be honest with you guys, I prefer high risk to reward ratio. Mean that if I lose 1, 2, 3, 4, 5 times, I lose small, but I know that I only need to hit once or twice within my 6-1 risk to reward ratio, 4-1 and up. Okay, or 4-1, 5-1, 8-1. Then I will make all the money back within one trade, and my second one will be profitable at the end of this 10 or 30 trade. So that's me, because I can still be here online on YouTube with you, even I just lost 3 trades in a row, for instance. Okay, so and that we cannot decide for you because this is you. I mean, you need to find out what kind of trader or which personality you have. What is your risk appetite in these markets?
That's definitely the case. I hate taking those punishments, but this then brings it to that controlled environment, because what you said there, Lee, and I think you guys need to really bring attention to this. He said apply a specific strategy, and if it's got a 2-3 risk to reward ratio, or a 1-3 risk to reward ratio, then you only have to be accurate more than 26% of the time to walk away with profit. And the only way that you're going to know that is actually by placing those 20 trades or those 25. You need about 20 thereabouts, the minimum, to test the strategy. So Lee comes to me, Rudo, I didn't sleep last night, bags under the eyes, but I've got a brand new strategy. This thing is going to kill it. And I say, okay, right. What's the first thing I say to you, Lee?
Where's the sample? Show me the sample trade. I need to see the sample trade.
Where's your 20 trades? Go and tell me where you applied these conditions, because a strategy means that there's a certain set of conditions. So a simple set of conditions means I might be buying when there's higher highs and higher lows. And then I buy the 20 moving average when it's on the 20 moving average. And the RSI needs to be at below 50. Okay, so that can be a trading strategy. You don't have to make things complicated, but that is the conditions. And only when those 3 conditions are met, at a minimum, you're allowed to place that trade. And then you take
So your setup needs to be, that is what you used to say, Rudo. Your setup needs to be easily identifiable. Do we say that in English?
Yeah, or something that you can explain to somebody within a few sentences. Yeah. If it's something complex that I'm using Bollinger Band there, and if it's in that, and the Fibonacci needs to be that, but because it's this day, it's going to be that. And if it's something crazy like that, it's not a real trade strategy. That is a prediction strategy. We use these things. We look at options and we try and get big picture goals of what is possible and what we should be looking for and so forth. But when we trade, it really starts getting simple. Is it in your zone? He puts a Fibonacci level there. It's in his zone. He buys it because his big picture kind of supports the idea. It doesn't mean that it can't be wrong or won't fail. But that's where we do all that stuff. But when we trade, it's simple. Same for me. I trade demand. I trade supply zones. I stick to those zones, but I get good buys, and I'm happy for waiting. So Lee will be taking trades at a different time than me, most probably. But, sometimes I miss them, sometimes he misses them. That's the thing. But we have our sample sizes. When we have these sample sizes and we have a percentage accuracy, we can go and tweak it. Now, Lee, you with your sample sizes and your last trade strategy, or the one that you use most, for the audience, do you have the percentage accuracy? This is not to flex the biceps or to brag. That's just on average, he knows how many times he's going to be wrong.
1 out of 4. Call it, 1 out of 4 more. But
so that's
good strategy. I'm targeting at least a 4-1 risk to reward ratio. So I'm pretty happy with that.
Yes. And I have a 70, 76, maybe 80%, somewhere in the same area. So I'm right 1 to 4 times, but I hate that one time that I'm wrong way more than Lee does. He can nail it for a couple. That's my thing. But I put my accuracy over 20 because this is the thing, Lee. Do you only have one incorrect trade every 4 trades? Or do you maybe go for a
No,
row where you like
sometimes
10 in a row,
no.
you hit them?
No. Sometimes, yeah, you hit like 6 in a row. Sometimes you have 3 losing trade in a row. But it doesn't stop me to do exactly the same thing, day after day, trade after trade, exactly the same setup, because it has been proven in the past that statistically proven that it's working, it's making money, and it's okay to lose 3 trades in a row. But again, it's not because you lose 3 times in a row that then you say, oh no, this is not working. And then you have to come back and change everything. All right. So it is proven over 20 trade, over 50 trade that it is working. So sometimes, yes, 3 trade in a row, you hit stop loss, stop limits. It doesn't mean that you have to redo everything. No. The moment that you need to do, you need to rework your strategy if it is not working. After this 20 trade, you see that if it is not working, your setup is not working. Now you need to go and maybe tweak a little bit. Maybe this is wrong or this is right. Write down what's happening within this 20 trade. Have you changed your own strategy within this 20 trade? Or within that trade, did you move your stop loss? Did you change your own strategy because of your emotion? Maybe that risk to reward ratio is too big, or maybe your position size is too big. That's why you are going back there and then changing something. So you need to write everything down also in a trading plan. And we used to say as well, the trading plan is it's for you. It's like your own journal.
It's unique to you, yes.
It's unique to you. You write down everything, and it will help you understand yourself better. All right. So because every day we have so much things to remember. Now you write down. To this morning I wake up, I was happy. I'm in good mood. I'm looking at the trade. When you're taking a trade, did this setup match my strategy? Condition 1 ticked, condition 2 ticked, condition 3 ticked. Then you can go into the trade. If the trade didn't work, you need to come back. Did I really check everything? Maybe you missed out on the third condition. That's why the trade failed. There's a lot of things that you need to do at the beginning, to work it at the beginning. Test your setup. Go back, use that rewind function. Go back and see if it's working. If that trade is working after using your rewind function, then paper trade. I know it's boring. It's not fun. You're not putting your money first. But after this 20 trade, put in on a paper what you have done. You are not risking your money. And now you have a sample that works. The paper trade telling you, okay, it's working, because now you trade really without emotion, because it's just writing your trade down on the paper. And then after that, you can put money on it, and you're going to see that this is how you start to trade like a machine, trade like a robot, because this whole environment that we're trading is controlled by bots. So be like a bot and try to understand the system. I sometimes take it as a game. I try to play a game against the bot and try to hack the system and think about what is the formula that is behind.
So, and this is now where the big difference comes in, because he nailed it. When I look at trading, you guys can see the screen here, I like to go on the 1 to 5s. Maybe I'll go 1 to 6. And that's about as low as I go, because that 4 in a row that I might lose within 20 trades, that still bothers me. It does not bother Lee. So when you go for a lower risk to reward ratio and you've got a good proven strategy, the odds mathematically that you're going to be wrong 4, 5, 6, 7, 8 times in a row is way less than when you go for a 1 to 8, 1 to 10 and higher trades. The odds that you will be wrong or get stopped out is much greater on those ones. So that is what differentiates Lee and myself. So I like to trade in the lower half. Lee likes to trade in the higher half. And that's due to that, because remember, he said it now nicely, guys. The sample size is over 20 and higher. You can't have it below. And you can't take your first 4 trade as a guide that this is a winning strategy. Lee, thanks very much, buddy. I think, is there anything else you want to add to this, or that we might have overlooked?
No, maybe how to use that tool. Just simply how to use that tool on TradingView, how to define what is the risk reward ratio.
I think that is the next step, my friend. So let's go. So what Lee has here is he's got the tool. Maybe show us in TradingView where to find the tool so that he can
It's
quickly
here.
access it.
So 1, 2, 3, 1, 2, 3, 4, 5, 6, 7. The 7 little icon on the left. When you click here, you have a long position and you have a short position. So if you just started, I'm just suggesting you guys to do this long, and then we'll have a small tab like this. And here you can basically put where are you planning to go for a long position. Now, where is your stop loss? Okay. And then where is your take profit? Remember, when you go into a trade, you always plan it before you enter the trade. So technically, you should have already your stop loss. You know already where to put your stop loss, and you know already where you're gonna put your take profit. And this little number here in the middle, now it says 4.7%. It means that you have a 4.7 risk to reward ratio on that trade. The stop loss can be adjusted. So here there's another very important point to remember. The stop loss doesn't need to be at 3% or 5%. It depends again on your risk appetite. I wouldn't suggest you to go for a risk that is more than 2% of your trading capital. It means that every time you lose a trade, you lose only 2%. But it doesn't mean that you have to put your stop loss at 2%. Okay, if you put your stop loss at 4% or 6%, you just need to lower your size. So if you have $100, you are only willing to lose 2%. It means that every time you lose a trade, you're going to lose $2. But if your stop loss is at 4% risk, then instead of putting the whole $100 into that trade, you only put $50. So 4% of $50 is still $2, which is the 2% of your $100. Okay. So the stop loss percentage just doesn't mean anything as long as you know how to adjust your position size. Yes.
I just wanna show this, buddy. And I'm trying to figure out why yours mine prints out risk reward ratio 1 to 85.
Yeah.
Oh no, it does go up
When you
there. I
drag
thought I
it,
had
when you
it.
drag it. Yeah.
Oh no, sorry, it's just me being silly here. 1 to 8, 1 to 10. It starts going up now. Okay, cool. Don't worry. I apologize. There you go, my friend.
Okay. So again, I mean, the setup is different to everyone. Like I said, if I give you a trade and I only use 8 to 1 risk reward ratio, mean that I can get stopped out 8 times before the winning trade. But maybe for you, after the fourth losing trade, you're gonna quit trading because you can't handle those losses, and it's not gonna make you happy. It's not gonna be fun, and you may doubt about yourself, about the setup, about the guy who's telling you how to trade, and so on and so on. So it really does not depend on the trader. It's really depend on you and your personality, your psychology after that.
Right, so we've now literally done a lot of time where we've looked at, the philosophical stuff of trading, trade management, risk management, and how you should think and feel and everything. But I think now let's maybe flip into some charts, Lee. Can we look at the coins that we shared last week and quickly see what the weekend's moves and the last few negative candles has done to those coins?
I don't have all of them open, but I see that EGLD, Elrond has moved quite a lot. So these are the take profits. Remember, we don't know when it's going to end. So these are still all my TPs on Elrond. So make sure you take profits on this trade a little bit by little bit. Don't close all your position because no one knows where it's going to end. But just take some profit on the way up. Take profit on the way up and then buy when it's going down. So when people tell you to buy the dip, you still actually have some cash and some money to buy the dip.
And this one, actually, we were lucky because the reason it really pumped like that was because of they opened a DEX, and people were buying Elrond actually to move it towards the DEX for staking rewards. And yeah, so we kind of missed that one. I had the shorter term trade for you guys, and so we were on the stream Friday, and I was telling you guys to take some profit around this level and to let the rest go, because we're going to get resistance at these zones. And at the moment, if I now do this, and we start taking this supply, we move it into where that supply is. Just a little different to where Lee's is. I'm looking at around, I just want to get the text size right. Lee, do you have a target around 522 thereabout?
510. Next one will be
There you go.
585. Yeah.
Okay, cool. 510, 585. It should be a probable area. But the nice thing is it's going to lose momentum. It's going to show you the next candles are going to start getting smaller and smaller and smaller. And then you know you're kind of running out of steam here.
Is it a buy now?
Definitely not a buy now. You can't get in now. It's too risky. If you were to do a risk to reward calculation, if we were to buy now where it's at 492, I will have to carry a 44% stop limit on this thing in order to say that's where the next lower low is. Or I can reduce it to 17% or any of those things. It's literally too scary. If we flip to lower time frames, you might
exactly now where is your stop loss? I mean, you said 44, which is 41% here. Where's your take profit? 585.
That's the thing.
That will give you a 0.47 risk to reward ratio. So you're gonna put $1 or $10 on a table in order to make 47 cents of half of the money that you are risking. So it's not worth the risk.
Yes. So if you think about it now, if we say you need to be right with a 1 to 3 setup, you need to be right with these type of trades 40% of the time just to walk away break even, or 30% of the time just to walk away break even. It means how many of these trades do I need to put to get that one factor in? So am I buying 20 coins on their spikes, and I'll walk away with one that, that's going to give me gain. So it doesn't make sense if I think not in the specific trade with my feeling or my gut saying there's more, but if I look and I try and apply this feeling over 40 other coins, the odds that I'm going to be walking away profitable is it's not good enough. So I'll rather let it go. Lee, next coin there, buddy.
Well, to be honest with you, I haven't prepared the coins that we're going to talk about. Which one we want to go for?
I don't really think. I think we can maybe go through that Twitter list that you sent me a while back. We can go through. I can give you the names. Do you want to do that?
Yeah, give me the names.
I think we can go to Cardano. Loading.
Cardano is, for me, it's a good buying zone right now. It's finding support at 180, 176.
Sitting right there.
Yeah. So this is even a weekly chart, but 175. I think we went to this 175 last week, and then we are just consolidating a little bit. It's not ready to get a bullish momentum yet. We are still making lower lows and lower highs. But this is a support level that they had, 175.3. And if you lose that, maybe 133.4. So I'll be careful, not to put everything in Cardano at 175, but later in on a bigger scale of the time. Because here we are looking at a weekly chart.
Sorry, man, the buttons are jumping. I've got the same goal, mine on the daily chart, just to show you guys. On the daily, what Cardano did for me and why I'm thinking that your upper range will hold, Lee, is what do we have? We've got a low, we've got a high that beats a certain level, and we're coming back down. So I'm going to just up my buying point where I said to you guys that I think optimistically where I would want to buy was going to be this area here at $1.65. I'm going to bring that level up to about, let me just get the tool selected. I'm going to bring that level up. Why is this thing sitting over there? Okay, cool. I'm going to bring it up to about somewhere over there. And if I do that, I want to test this demand that was created. So I want to grab a buy. So I think ideally $1.74. So if I'm flipping back to your screen there, Lee, I think that kind of
175.3.
that's it. You see, so now, see, I took a different path to get there. Lee uses his Fibonacci magic, and look at
That's actually not even my Fibonacci level, Udo. That's my indicator, my secret indicator. Very funny.
yeah, which is his magic indicator. But okay, cool, guys. So Lee, so there's two traders giving you roughly an idea. The nice thing is with that entry for a trade, not for an investment or long-term hold, I will be able to have a stop limit hidden at around maybe $1.65, $1.64 thereabout, because if it goes in that direction, the analysis is invalid. This is then one of those where I don't get a tick mark, but I get a cross. This is the one that I get wrong out of my sample. Lee, next coin that I want you to, if you can, bring up for us is it's ALGO. I think we've been anticipating that reclaim of that crazy wick, and ALGO at this stage is hovering tantalizingly ready for a buy. I'm still sitting on my hands.
If you have your chart ready, you can share it first while mine is loading.
Okay, cool. Cool, I'm going to do that. So, right, guys, so what do we have here with ALGO? Like I said to you last week, we are preparing for this break of momentum that was that's playing out in this area. And we had this crazy wick. And these wicks tend to get filled. So this is really exciting me into this project just for that sake, because it gives me an idea that there might be something boiling here. And I explained to you guys that I will only buy it if we're in the buy zone. So currently, what do we have? We've got a wick, but I don't trust the wick as an agreement that this is a higher high. So that's why I'm not comfortable just FOMOing in because of it. It's a reason I like it, but it's not there. So what do we have at this stage is we've got this. So we don't have a higher high just yet. So I'm going to want to buy it on this area, because if this is demand, that this wick is the giveaway that there's demand, I can try and preempt the fact that this might be the lowest low we're going to get, and I will still be able to have a stop limit below that level. Because if it starts doing this, we're just going to keep on doing this indefinitely. Treat a trend as if it's going to last forever until we don't. And then once we do that, wherever the target then will be, I will then look to enter in that area. So I'm going to take a risk in that area over here. And another thing why I like taking that risk, it's a 10% risk. So if I've got $100 to spend on this, I don't want to lose 10%. I want to lose 3%. So I'm only going to use $30 to buy. The remaining 70 I don't touch, because later on, once I have more confirmations that we're doing it, I can look for these areas to bring that other 30 in, because 70 in, because guess what? There's still a lot of gains to be had. You don't have to put everything in there. Lee, your screen ready?
Mm-hmm.
Cool, buddy.
So yeah, I mean, like you said, this week you normally get used to get filled, but I would like it to come to 156. That is my first. I'm gonna pay a little bit here, 156, and the perfect zone will be 126 for me. Depend how hard Bitcoin is gonna retrace. If they come and test this 126.54, that will be the previous resistance, and we come back to test the support line again. If it doesn't, if we see that it's gonna go and make a higher high, maybe buying back on confirmation, going higher, holding this 184, 85, closing daily above this kind of level, then we have to look at buying at a higher price. But for now, still looking at this retrace to at least 156. And if you have a bigger retrace, looking at Bitcoin, wherever Bitcoin is going to stop at 126, that would be another. That would be for me the perfect level. So I'm a little bit more bullish, bearish on ALGO compared to Eurodollar.
Okay, cool. Right. So,
and I would say last one to finish.
Yeah,
I think a lot of people is asking for Fantom. Or you have that
Fantom. I
on a
don't
chat.
think I've got it marked. Let's have a look. Yeah, I've got one Fantom. Okay, so Fantom. Fantom made a higher high. So this is definitely something we need to think of. Remember now, we've been doing this crazy on our way back down. That's the area that was kind of important to me. So if I look at that, we made that higher high. So that would be the area where I would want to see the higher high alert. So we touched it. We have engulfed this whole area. So for me, I don't think we're going to go back down on this area. It all depends on what Bitcoin wants to do. But if not, if it does go into this area here, I would buy from about $1.80 onwards. And I wouldn't want to be buying lower than $1.73, because guess what? Then we're making a lower low. Then we're just trending down on top of this trend. And I don't want to be, sitting into giving a losing trade that much attention. I'd rather get out and wait for it to continue on a different angle. So that would be the areas. Fail-safe buy for me, because we have this area over here where we've engulfed. I see price is going to hover around this level. So if we stay at this level, and this is where I bring in the RSI, and we create some sort of a bullish divergence, that would be a nice reason to buy as well. So let's open that up and let's have a look at the 8-hour. So what do we have? We've got a higher high and a higher high. So probably not ready to buy just yet. Lower low, lower low. So we've got lower lows on all the pivots. So it's not ready. So I'm indecisive on where, but I at least got 2 areas that I'm interested. If I buy this zone and it goes in there and I get my divergence, that would kind of be the area at $1.97. I wouldn't want to hold it lower than that range, which means it's a very tight risk management plan. But I rather take the stop and then wait for the next area over here. Lee, do you have a Fantom ready?
Yeah, let's look at this. Same for you. I had here the 2 support level. Which one? The first one went already too deep. The second one was hit perfectly at that line. This one serving as support. Now we are coming and testing back this one. So if we don't lose 196, the test of 96, we went there to test 196 already. So if you don't lose that one, I'm pretty confident that we're gonna go and making a higher high, come and visit the supply zone here. But in general, Fantom is not ready to pump. The momentum is still bearish. So spending a little bit more time within this area, and maybe, worst come to worst, another visit. That would be the 1618. If I consider this as a move, 1618 would be at 140. And I've got the line here at 144, 131. But if Fantom is gonna follow BTC, if BTC drop, obviously there's a risk that we're gonna go to the 140 area, 139. But it would be nice if you can hold this first and then maybe making higher high. Coming back first up, because I've got the feelings that we're gonna spend a little bit more time before this old season. I don't know about you, but I'm only preparing mentally to be prepared for this old season only on Q1 next year. So I don't see any huge pump over this winter, the European winter season in crypto. So everything we can do is, don't get stopped out in the market, have the best position for the next bull run, prepare all the alts for the next alt season, but I don't think it's gonna come within next week or end of the month. It'd be very surprising to get to these 98,000 according to Plan B on BTC in 1 week. I really don't believe it, but who knows?
I'm sharing your sentiment there, guys, just to bring back Bitcoin. This was the buy zone that I was looking at, and we in the buy zone, we failed to make a higher high. So I will not be letting this thing run in drawdown. Stop at break even. I'm not too overly concerned about giving back the 5% that I could have made there, because I want to buy and not walk away with 5%. That's again where I'm greedy. I want to get the biggest swings. Buying here, I want to see that smashed, and then I will add to a position. So where we have now, we haven't seen it smash. I cannot add to a position, which means let that one run at break even. Give me more info. Show me if I can enter again. And with what Bitcoin is showing me, it does not mean that it can't do this. And while it does that, some of these alts go up high. Bitcoin can go sideways. This thing can decide to break out there and then make a higher high.
Some of them, maybe not all of them,
You're going to have them. So you can't treat, because we get that question where people say, oh, but you're saying Bitcoin is bearish, but now you're giving me a buy signal for an alt. But who's to say that this thing does not outperform Bitcoin? That's why when we look at coins, and this is like VeChain for an example, when I look at it, I don't just look at it on the dollar pairing like you have here on the far left-hand side. I look at it on the Bitcoin pairing as well, because I want to see. That's why I brought it to you guys, because we were doing what? We were giving ourselves signs that we were going to outperform it to the Bitcoin pairing as well. I don't just want to make more dollars. I want to make more Bitcoin as well. Otherwise, I'll just be in Bitcoin. And at this stage, VeChain has done it, and there's a bit of resistance sitting right there. So maybe it's getting ready to pop. And this can happen while Bitcoin dumps as well. So you just need to keep that in mind when we look at these trades. It's not always as clear cut as we wish it could be, and patience is the key to these things as well.
All right, Lee? I think we're running out of time. Again.
Yes, buddy, we're seriously running out of time. We need to shorten this. We started so well disciplined, 32 minutes at the beginning, and now it's becoming too long. But okay. Buddy, sign it up fast, please. You're Mr. Risk Management Expert.
Well, thank you again for being here with us today. We're going to have an exciting week. And yeah, if you like the content, if you like the work that we're doing here, please smash the like button here below. And share it. If you want to have some more people, just share it. And then, yeah, I appreciate your presence with us every single day.
Thanks, guys.
Did I say that? Everyone